Welcome to the bubbles stock market closing show for Monday, October 20th, 2025, 3:15 p.m. Eastern Standard Time. We got 45 minutes left to the market, my friends. Speaking of time left in markets, look what I found. News. I didn't read the article. I didn't click on it. I just saw the headline. And that's all I really care. I don't care about the details because I guess I'll ultimately know when I see the option chain still open. But seeks extended option hours. I was thinking about this since there's this after hours stock trading. What about after hours market trade or stock option trading? That would be interesting to see anything popping up in here. Super micro. All right. Sounds good. Yeah, let's drop the news and take a look at stock price in relationship to 20 and 9-day moving averages. So we got a 10-day moving average here and we got a 4-day. So it's a little bit weird moving average selection. I think it's because I originally put this together on a weekly. I think this daily was not a weekly, but nonetheless, we are we're going to look at these moving averages, even though they're kind of weird. So pretty short term moving averages, 10-day and 4 day, both simple. And where is the price in relationship to them? All right, we see the price is on the top side of those, and they are both on the top side um, of the 200-day moving average, which is steeply sloping up, and that so we're seeing a continuation of a upward trend. Now, over here we have our stock price for Amazon below both the 4 day and the 10-day moving average, and I guess it's a okay. This one, sorry, on this one we have a 9-day exponential and a 20-day simple moving average. So the white one's a 9-day on this, but nonetheless, it is still price action is on the bottom of those two moving averages. Getting and now these two moving averages are beginning to meet the 200-day moving average. So this is going to be um, interesting to watch over the next days to weeks to play out of how is this going to what's going to happen in this area, which will probably give us indication if we're moving from sideways to down or sideways to upish. Same thing, not exactly the same thing, but we have a similar moving averages starting to converge with the 200-day moving average. But definitely the price, look at how the price is in between these two moving averages over here on Amazon, completely on the bottom. Price getting between the 200-day and these moving averages. And I think we're going to end up seeing this price interaction stuck in these moving averages a little bit more. Right, we see it again here in Nvidia where price is between these two moving averages, but we're close here by this 200-day moving average. And Nvidia, from the big drop on Friday, we're still in the bottom part of that candle, which is really starting to look more sideways for Nvidia with our moving averages looking like they're going to go sideways here. Uh, and even though, like, yeah, this is great, we got a big upward candle, that's true. But when we're averaging this price action out, look at we've got these two faster moving averages coming in to play with this 200-day moving average, slower moving average, which has been moving down, and see this big up here, down, so we'll see how it plays out. It's going to be very interesting how all of this happens. Here we have a way lower price action, but these lower price action of our our current moving averages are significantly below the 200-day moving average. They're moving up into this area, but let's see what happens. There's there's just a lot of momentum to a lot of small indicators to sideways to down versus sideways to up. Now, maybe that will start changing if if a third of these seven stocks, a third one starts getting into a significant uptrend again, then then things change a little bit. But we went from like three in an uptrend to two in an uptrend, and the one that changed from being in an uptrend to where it's at now, it's like not looking bullish at all for the moment. That was Nvidia because the price action, whereas Apple, like after that big drop down, Nvidia had a big drop down also, but Apple is where's its current price action at? Boom, way over here, over this drop. But Nvidia, where was Nvidia? Here's that big drop. Where's the price action? In the bottom 10% of this big drop. It is still, I mean, things could change, but unless they're going to every day, right? Tomorrow, today, this is going to close. It's probably going to close in this lower 50% of this candle, and then tomorrow there'll be a new candle, so things change. We'll see how that new candle goes. Well, I'm thinking let's move over to our see the markets. I think it was a strong, yeah, last time I checked, really strong in all the indices, stock market indices, really strong up day. Now we're getting back to challenging this drop, right? For almost, yeah, yep. For all of them, we're starting to get back to that top level again. The VIX futures taking a dive down, oil still in this downward trend. Bitcoin, let's see what it's going to do, is have an update today, as well as gold, or excuse me, silver after this sharp sell off. Same thing with gold. Less of a sharp sell off with gold, and more of kind of like what Master Trader might call a red bar ignored. And over here, we definitely don't have a red bar ignored. We're in the bottom 50% of this candle, but still looks like nothing breaking a uptrend there in silver on that 1 month chart. So yeah, the stock market overall is looking relatively strong. We got a little bit of a move down. Was it a move down today on the MMRI? Because over here on the chart part, it has a posting of the last posting was I think 245. There's something on the October 17th. Man, there we go. October 17th, 245. But today we're showing 244. Tiny little tick down. And I want to bring up this gentleman, because in this video here, he ends it by potentially predicting a stock market collapse or downward trend at least here on Monday. And we got a strong day up, and he also I think on was it Friday or Monday? I think in this video, I think he was predicting Friday or Monday, and then this one I think he made it on Friday, and then predicting for Monday. And I gotta give him credit. I think he's got a pretty cool designed YouTube channel going on here with the whole theme, the whole narrative, I guess, the gimmick, if you may, of what he's got going on here. And I have to say the fundamental stuff that he's listing in his videos, I think is spot on. We look at Schiller, the Schiller index, and the unemployment, and just a variety of things that fundamental stuff, things that we look at, and it markets look pretty, weak, I guess, but it seems like there's something going on that that keeps moving markets up, and that something does somewhat seem to be indicated here. And I think with what Mike Norman of the MMT economics, what he's whatever he's talking about in the MMT, I think there's excuse me, and the MMRI. Maybe it's like the MMRI might give some insight because it definitely gives an insight, but might give some insight into some sort of flows that Mike Norman's talking about. And maybe it's sort of given insight when it's dealing here with the Treasury in comparison to the Dixie. And I can only think that because this and Mike Norman seem to be kind of accurate on ups or downs and how sometimes when there's downs, like how worried to be about that down. And the only thing the MMRI has going on is the Dixie and the dollar and the U.S. 10-year divided by this number. I don't know what this number has to do with it, but I didn't make it. But it overall seems to be pretty accurate. And then from what I've been listening to of Mike Norman, that seems pretty accurate too. So we have two different things that they would probably argue with each other. They probably would not be in agreement in a conversation if Gregory Mannarino and Mike Norman got in a conversation, but yet it seems that the work of Gregory Mannarino via the MMRI and what Mike Norman's YouTube channel, what he's saying on his YouTube channel, they seem to have some sort of harmony going on. So isn't that interesting? I think that is why Robert Kiyosaki is a genius for using the statement a coin has three sides. Your job is to stand in the middle and look at the heads and the tail. Because when it comes to the markets, there's one of the biggest things we're dealing with is something that comes from an element of preconceived notions that's somehow attached with emotion. It's these things are driving us when we're making our different decisions. Speaking of making different decisions, look at let's look at the old anything column. Bitcoin, we got two ETFs representing Bitcoin here, and they basically kind of bounced up. I forgot to look at the Bitcoin futures specifically. ASTS pulling back to this 20-day or this 9-day moving average here. I think we're going to see a variety of stocks looking kind of like that, right? This one looks kind of like that too, pulling back to that 9-day moving average. Look at here, the Oklo, same thing, pulling back to that 9-day moving average. Palantir is kind of in that 9-day moving average area. Okay, so we got our we don't have a clean distinction between moving averages here, which isn't surprising because a lot of the Mag 7 moving averages look like that, don't they? All kind of clumped together. Let's see. Hood, FCX. Yeah, so I think we might be setting up for some sort of run with these stocks at least. Maybe not the whole stock market, but these four here, this five, six, these six, and gold isn't on here. GLD isn't on here, but that one has been ripping to the upside. I don't have a ticker that I'm using to try to catch anything with of that movement with silver. At the moment, Coca-Cola up, MO a little bit down. I'm looking at selling cash secured put options on Mo for about 25 days or so. And I've been still working on attempting to open this short strangle. And since I made the video from earlier on the open, I think one thing that I'm going to look into more is I have a position on Tesla right now. I have a short strangle on Tesla, and it is going to expire. Both the put and the call will expire this Friday. And coming to the next Monday, I'm going to look at maybe just loading up on some strangles on Tesla instead of now because I really had been using now and Tesla, kind of more Tesla on the like one-sided part, but what's the point of a one-sided strangle? Sometimes there is a point to those one-sided strangles. Anyway, so we have overall here's our stock market, at least the S&P 500 of the stock market pushing up to these new all-time highs, VIX coming down pretty strongly. And so I'm hoping the VIX comes down to like a 15 level again, which it was around in here. Because I was testing out some long VIX calls, and this, and I've been testing them from way back here. I don't know, since I got to the Eastern Standard Time Zone, I going through the armor class and learning and yada yada. But after this right here, like I'm, I've learned a lot. I learned a lot, so I'm ready for that VIX to come back down and see what I can do from there. And it's not just really see what I can do, probably isn't the right way to explain it. Attempt to make a greater profit on the next time the VIX pops up like that. So, what do I see going on as we're going into the close? I see a. Well, let's talk about what we don't see first. We know for a fact, like we're not seeing the market fall apart today. Right? This is a pretty bullish candle here, and it's in where is it at? It's it is in relationship to the top part of this candle. Let's change this over to, I think it's this one. Change this over here so we can also check out the Qs. So same thing, a ticker or a ETF ticker type of stock of an index. This is the Qs. We see the volume is update, but the volume is not hitting average volume. Here, this is our average volume line. So our volume today is under that, which tells us like these days over here is probably this is big institutional trading. This is something that will get big institutional money into it or out of it. And where we are here with this, we are, man, here's the high of at least I think this is an all-time high, and we're back to testing all-time highs. We're only a little ways away from 615, which would be what seems like an all-time high. Let me just change this time frame to double check myself. Max available. Yep, all-time high. So that's our max available. Let's switch this over to monthly candles. Yep, looking like a strong uptrend there, huh? Yeah, this candle opened up in the top portion of this big one, and we're up here. So, and I think it's just really goes back to the wisdom of Robert Kiyosaki's teaching of three sides to a coin, because we've got a lot of evidence to suggest that the markets are should be going down, or there's not a lot of reason for them to go up, but they keep going up. They keep going up. They keep going up. So we're seeing similar like S&P, Nasdaq. It's going up. S&P is not too far behind the Nasdaq of hitting all-time highs. Russell 2000 is it's lagging behind. Was this the big drop on Friday? I think so. So it's not really lagging behind. Not only did it skyrocket up, it's already like cycled past. It already got up here, retest that high, went back down. Now it's cycling up to test that high again. So, I mean, holy smokes! While I think that there's really bad fundamental data in hitting this witchy type of number here on Friday for a close, but heck, they're just like, here comes Monday and VIX is coming down and indices are going up. Let's I don't have anything for. Let's quickly look at the Dow. See it here. We'll look at right here. Okay, Dow's yep, strong up. So if this is about helping you gain financial independence without spending all week in front of a computer, like where where's that coming from? Well, it definitely uh, starts with starts with starts with your own spreadsheet of financial information. I don't have the bubbles one pulled up easily right now. So from there, like let's look at a monthly bill. Right? Let's look at how we could theoretically make some money with what we have in front of us now, as far as what choices we have from the market. I don't mean the ticker symbols I have pulled up here only. I just mean let's make some money with what the market is giving us. And how much money do we need to make? Let's say a bill of 55 bucks. I mean, I just love this one because it's right in the middle, 55. And the reason why this is important and it's has much more value. People might poo-poo this, and this is why it has so much value, is because it is easy to poo-poo. Oh, 55 bucks. What are you gonna do with that? Discounting it, not putting value on how beautiful it is to be able to generate $55 from the internet, somewhat on will. Like you got to play the game, but it's not hard to take $55 from a stock market that's online that has trillions flowing through it, or at least millions, big numbers. You're trying to get a measly 55 bucks out of there's at least $100 million that flow through the market all the time. You could easily figure it out by taking take this number. Uh, how might it okay, here is, let's take the Q's and get over here to 0 DTE. So what it what is that? This is the option chain, and here is the let's find a call that's definitely in the money. And I mean, this is definitely in the money, but let's say one that more than likely is going to expire in the money. So this example will have as much credibility as possible. Let's say the 600. Okay, so today, assuming that the 600 expires in the money, which it seems like it's going to, then there's going to be, where's our volume? Now I'm not exactly sure how to pinpoint this, so I'll go with the conservative number. Like volume is that volume that was just traded today, and open interest I think that has been traded fully since the inception of the um of the contract. But at today's expiration, there is going to be a certain amount of let's say money that exchanged hands, because I don't think wait this will be I think this will be settled by the actual ETF being exchanged. But so well, let's look at the value of that ETF versus grabbing some sort of underlying instrument that's going to be cash settled. We'll just go with this one, share settled, and look at the value of those shares. So let's say we'll go somewhat conservatively here. We're going for the 600, and so let's say, because it might be more than this number, but less than this number. It's probably somewhere around there that of how many shares. Because if there was let's take this number and divide it by half. All right, 2,217 divided by 2, because let's say if there's 2,000 people that took a position since inception of this contract, and let's say they're still open positions, that means they're like half on one side and half on the other. And so there would be, it's sort of reasonable to at least run this idea of how much money is flowing through the market by saying, okay, today, just on this contract alone, there would appear that there's going to be half of this number exchanging hands, because this contract legally binds one person to give 100 shares to the other person at this sales price. And people went into this agreement knowing it. Now maybe some people are going to exit early, maybe this, that, and the other with market maker, all the stuff, fine, but still money is flowing around here. And so let's take these 1,000 shares times a strike price of $600, and then um, like that's a lot of cash. That's a lot of value of stock. $500,000 of stock seemingly going to exchange hands because of the option market, but that's only one strike price. So that's going on also with all these different strike prices. Look at the open interest. So here's my point. If you look at like this 500,000, and here's, you can see how 500,000 around here with this open interest. So we're looking at about a thousand, right? So this is one is more expensive because your strike price is higher and it has more volume. And look at this. So my point is, out of the small kind of smidgen of the market, out of all this money flowing around, you're looking at several strike prices that are around 500,000. So let's give us a $2 million to work with. But there's way more, right? Because this is only one indice. This is only one thing. This is the Nasdaq. We're not dealing, and this is not even looking at also adding the financial volume of the S&P, of the Dow, of the Russell. All this is happening simultaneously. And like there's so much money flowing through here. So you take that, and and what if you're just trying to get $55, right? We're just trying to get $55. That's the point of all this, the $55. Out of all that money flowing through here, we're just trying to get a measly $55, which is a very, very small percentage of the money flowing through, which means it's doable. Now, if you're trying to get like $1 million out of the 2 million that's flowing through there, you're trying to get 50%. Like it's harder to get 50% than it is to get a 0.1%, or some small percentage of that number. And so the other thing that ends up happening, so just this, we really want to paint the picture here that this is a doable thing. This is not a unrealistic endeavor here. And $55 is so low of a number that the reality is, if you cannot consistently make $55 in a month by selling options, you don't know what you're doing. And you need to learn. That's it. Like if you don't know, you don't know what you're not doing it right. $55 should be very easy to do on a monthly basis. So let's look at how we might be able to do some of those. We'll get this out of here for now. We might pull that back later, but let's go with some of our easiest ones. This one right now is a really good deal. I would pull up the fundamental numbers like the enterprise value, the PE, the PEG. I would pull that up right now, but I'm a little bit lack of preparation right at the moment, so we're going to pass on that. And we're just going to look at the option chain real quick on MO. Before we look at the option chain, let's maximize this. We're looking at 3 months of data. Let's turn this to a 1 year chart, 1 year time frame, at least right now, for us to be looking at this. in the bubbles stock market show. All right, so now we see 1 year of data, and you see how there's these kind of these ledges where from left to right it is definitely up, but it didn't go up straight, right? I can draw a straight line from here to here that we see is up, but it actually went. And why don't I do that? Why don't I show you how I can draw this line? This is going to be so amazing. Okay, so I went down here, click, I clicked this active tool. I clicked it over to this one where it says trend line, right? I was on this. Go down here, click on that, click the trend line. Now I'm going to take my little trend line drawing thing and I'm just going to put it kind of reasonably, try to put it around there, right? It's not going to be exact. And where's the price currently trading today? Just sort of reasonable, boom, right in there. And then now change this back to here so I don't have to worry about that. I can still edit it. I can do all types of things, but now see how it went up, it went down, it went up, it went down, it went up, it went down again. It's up, down, up, down, up, down. Oh, then it went up, then it went up, then it went up, then it went down, and now it went up, and now it went down. So see how there's these kind of these ledges in here? Like, see this long channel. So where would be a spot to buy at? Right now, maybe 64, 62 doesn't really have much resistance. The master trader talks about this gap. There's definitely seems to be a price gap or a void. Don't hold me to their definition. You have to watch and learn from them, get their stuff. But there is some sort of concept where maybe there's a bit of a void until right around here. And this is not really a trend line for us to make a decision on. This is just showing like it goes up and down. It doesn't go straight up. It just happens to be that I picked this, boom, to put it here. So we know it might. It's probably gonna go up again. Or we're looking for, if we're just looking to make $55, we're looking to sell an option in less that expires in less than a month. Here we go. We're looking to sell an option that expires in less than a month. Let's look at the 25 because that would be less than a month. Oh, before we do that, you know what? Let me go over here. This is on a screen that you can't see, and check the Analyze tab. Check the Earnings sub tab under the Analyze tab to see when earnings. Let's see if this is something I can easily detach for you. Yes, I can. Bam! Look at this. Okay, so we gotta slow down our roll over here on MO because look at we got in 10 days earnings coming out. In this type of trade that we're looking at doing, it's a trade that you want to do when you avoid earnings. And so we're not going to do it for this quick 4 days here. I mean, you could do it, but it's not going to be around $55, right? Because these there's just no money here. But we wait in 10 days. In 10 days is going to be the 30th, so you'd be starting a new month on um, after this after this after this report, the most recent earnings report. It's either gonna drop down or drop up or kind of stay the same, and then we would look at a longer term trade on that. I'm not sure what stocks that would be. We'd have to look at some earnings reports to make sure we're not hitting anything. And there's a variety of stocks that I like selling options on that are close to earning. Let's check out Coca-Cola. Let's go straight to earnings and let's just do Coca-Cola quickly. October 21st. So, it starts to be a bit of a gamble. Like because tomorrow, October 21st, tomorrow obviously is going to be the earnings report. So, I mean, we could put a trade on, like a, we could do something like this. I don't particularly like it, but obviously I have a position way out here. And we could put something on that it's going to come in tomorrow. I don't want to, you know what? It's like I'm trying to force something to show you how to place a trade for 55 bucks today, but it doesn't really work like that. As you can see, like I like Coca-Cola, I like Mo. We know why. At least on the Bubbles radio show, stock market show, I think we talked quite a bit about why Coca-Cola and Mo, and it's just a matter of waiting for their dividend or waiting for their earnings reports to come out. That's how it is. It's how trading is. Like you, that's why it's good to have multiple things. So let's look at some other choices. So we looked at those. What about something like XDTE? Options on this are tough, doable, but not really. It's like a weird sort of trade. I wouldn't want to use this as a XDTE is a theta trade that I can that I don't view this as one I can count on. Now this one maybe this one might be worth looking at. Might be worth looking at. BTCI, the options on BTCI are kind of similar to XDTE. They're like kind of shoddy. There's some, it's doable, but ibit would probably be a bit better if you just want to get 55 bucks. Let's take a look. So we'll go over here, bring up ibit. See, the thing that's tough about ibit is really volatile. So it can be way up here, and then in a 3 month time, it hit its 3 month high and low within how many days is this? One, two, three, 4, 5, 6, 7, 8, 9, 10. Within 10 trading days. It's pretty volatile. But it's moving up here. Uh, let's let's take a look at some options. We got 8 minutes left to the stock market closing. Let me take a quick look off monitor at my positions. Yep, it's just closing out easily. But we're going to look at ibit, just doing some general learning, research, see what we can put together. This is the shortest days to expiration. And we got money. How far away? This is one delta. Got a little bit of money. I'm guessing over here too. Nothing exciting like $1, $2. Let's look at the chart again. Where did it go? Here it is. All right, so our looks like our range about 59 to about 72. 59 to 72. 59 to 72. 59 to 72. Not much money here. There's a little bit of money over here, and you're at 11 delta here. 72. 2 delta here, right? Way lower probability here. What I mean, there's lots of ways to fillet this mignon or whatever the whatever kind of steak you fillet. There's a lot of different ways to cook that steak. Lots of different ways that steak can be prepared for you. Stock market's still looking up. I'm looking at a different screen over here. VIX is steadily moving down. We're at 1820.23. S&P 500 via SPY is moving up. 671.85. Yeah, overall things look kind of to the up. Looks like MO, there could have been a great day to um, potentially open some longer term options that, or just as a look of like an example, if the earnings report wasn't coming around. But where, oh where, oh where? This is a pretty short. This is pretty short. I think we're playing with fire too much. Let's look out a little more. Let's look at the 25 days. 25 days. And where were the strikes? We're looking at 72 and 59. 72 and 59. Here's our 59. We're at a 28 delta. So below that, we can move away over here to around, we go from a 15 to a 7 delta, 55 to 50. And you're getting around 70-ish bucks. We needed 55, right? We needed 55 and could probably get 75 maybe. I don't know. The highest it sold today is for 97. So maybe waiting, maybe put an order in for around 100 and see what happens. Wait a little bit, maybe less, like maybe 90. Put in for 90. It's probably not going to fill right away, and you'll be able to gauge like how much, be able to adjust it from there. But and then how much buying power is it going to take? I'm not going to go through. Maybe I will. Like my buying power is low right now, so it's going to take 500, and I'm already pretty low, so I'm not doing it. But it's not too. It doesn't take much buying power. Let's calculate the. I'm going to take this number, 74.34, 4.34, divided by the buying power required, 550. That's pretty. That's not too bad. A 13.5% return on buying power in how many ever days this is? 25 days. In fact, let me. Okay, we already went over. I'm giving this guy props. I'm gonna keep watching his stuff, even though there was no stock market crash. I think he's got a good thing going on. We'll take a picture of that. We'll use that for something. I don't know what I'm gonna use that for. I forgot. I already have a YouTube stock what do you call it? Stock bubbles, stock market show, stock YouTube thumbnail. That's it. Just delete that out of there. But that'd be your $55. And then, let's see. Actually, let's do this. Let me show you this as the stock market's getting ready to close. Okay, so now let's look at a potential strangle. Where are we at? Um, we have the $55 and potential strangle. What's to the upside? What do we got going on to the upside? Let's look at 70 because Bitcoin it moves. It moves quite a bit. What's the call at 70? Ooh boy. What's the call at 70? Okay, 23 delta. Uh, all right, so now um, control. Is it control? Yep. Okay, control. And now I'm going to add selling this call. So now we have a short strangle set up now. And then hard to borrow. Well, run into some issues here, but potentially, you're looking at almost 170, about 170 bucks in 25 days on 631 dollars of buying power. Let's see if this changes anything for us. 169 divided by the buying power of 631 0.10. Yeah, look at that. That's why these short strangles are something that I enjoy because look at this. Almost a 27% return on buying power in less than a month. And if you annualize that, that comes out to being a pretty big return on investment. Return on buying power. It's actually not return on investment. But yeah, maybe I should take a picture of this one. That's even better. Even better. Do the strangle, not the one-legged strangle, the two-legged strangle. There you go. All right. Look at that. Isn't that great? Boom. Got a picture. I don't know what I'm gonna do with this picture. But deleting that. So there you go. We set out to pay a $55 bill. Right? And now we brought in theory, over 55. So we brought in theory, about 169, which means we're trying to get 55 out of that. We've got 114 that's kind of like a cushion, right? Because we're looking for 55. We want to keep the full 169. Yes, we want to. But our mission at minimum is 55. And then let's throw in some tax, $55 times 20%, just for some numbers to work with. So we wanna take $11 out of that. So 55, the 11 we want to actually get a minimum of 66. So we can take 11 and put it to the side, keep it in the account, mark it down as like your tax cash reserve or something like that. But it's noted in your spreadsheet where this $11. So at a minimum, let's say you only did one trade, you would need to keep a minimum of $11 cash in your account for this theoretical tax payment. And that should help you deal with taxes, which, you know what, I am not a tax professional. That's why I'm going to tax professionals. That's why I'm trying to figure this stuff out, right? Because we as full-time traders, if we're going to be professional traders, we don't have to be professional tax people, but we know how we want to be able to get the answers from them. Okay, the stock market is closed. So we had a good example of making some money on a short strangle. Let's go through relatively quickly and look at the stock market. Where do I want to look at it? Which window? Okay, well, we're in this one, so we're going to go with this one now. See what stocks we got in here. And then we'll go through the Mag 7 real quick. All right, the Qs, you know, up. S&P 500, same thing, up. We would expect that to be up because that's a derivative of that. My baby didn't get filled. That's okay. And then XDTE is doing its up thing. The Russell doing its up thing. The VIX doing its down thing. And then Coca-Cola. I think buying Coca-Cola around 60 is a lot better. Shorting put options that put you buying at like 66 or lower is something I'm more interested in. We went over MO. We're still going over that. It had a bit of a down day, like selling option further out here, but we know the earnings coming up. We should check out the earnings for Coca-Cola. Speaking of earnings, ibit doesn't have any earnings, so we looked at our theoretical 25-day right here, 25-day short strangle. It's only theoretical because I didn't press the button. I think other than that, it's set up on a live account. Now we don't know if it would get filled for that. You'd have to kind of play with it, but those are good numbers to start with. BTCI, I think I bought a share down here. I got like 26 shares right now. I'm gonna build up a position of 50 to 100 shares and then reevaluate. Might as well just go with 100, but slowly, kind of one share at a time for fun, for some one share gang action. ASTS, Probably going to be setting up on this daily chart to buy and then at least for a run up from wherever the buy signal comes from, at least a run up to around 100. And Tesla, maybe it's probably I could see it reasonable to in today, like today or tomorrow, sometime entering a potential long position here or waiting for it to really clear this 450. But for some more upward motion up to the 470, somewhere in there. It's a possibility. I'm not doing the trade myself, but at the moment, but I could see that as we're just talking charts. FCX, FCX, man, I really love the stock. I wish I would have been able to load up down here around the low 35s, but I had to do some other stuff. Sometimes, unfortunately, that's just what happens. I had this short. It was just random luck. I had a short 44, had a short put at 44, and I didn't want to take assignment when it dropped way down here, so I rolled that short put to I forgot what number it's at now, but doing that and needing to have money obligated somewhere else, I wasn't able to grab. Maybe I should just grab one share, but I didn't. I didn't grab one. I didn't grab five. I didn't grab any. Oh boy. So see, is this? Ooh, I'm gonna look doji action. Got the white candle right now. Open close in the same spot with more trading to the upside. But boom, if you could have, boom, that's a jump up. That's a, it's a. I know the more exciting trades are making these big, like big move trades. I'll tell you what, making $20 on one share, buying, on a $20 move, or $20 from four different trades, $5 profit each. Any profit's better than none. If you're not making any money, better to figure out a way to make some money because there's money being made. You got to figure out how to do it. How's it going to fit into your lifestyle? Right? The short strangles, they fit into my lifestyle pretty well, but it might not fit into yours. You might not have the buying power. You might not have the risk tolerance. You might have the buying power and you might have the risk tolerance, but you might like doing something else. Palantir, kind of in the sideways range as it's I think still in the uptrend, but just kind of doing the short term sideways thing. Hood. Okay, we're gonna see what happens around these moving averages here. Pull back over there. Okay, now I think we're back to did we go through everything? Looks like it. So my friends, what can we assess with what we saw today, beginning this new stock market, new week in the stock market? What can we assess? Is that the right word? I don't know what the right word is. I'm trying to say what can we kind of sort of think about? Like it's a lot easier to not say it out loud and to just think it. Oh, let's see. Anything else that we should take a look at real quick? I'm still sticking with of course I reserve the right to change this at any time as the numbers change, but look at right now we had this big pullback. Market saying it's that the price is higher. It's not down here. The price is higher. So we're going a bit higher. How much higher? Not sure, but the VIX is still moving down. And what I will leave you with is less about knowing and being right on where the stock market's going to go. That is helpful to make money, but making money is the most important thing. You can't pay your bills with predictions. You pay your bills with USD if you live in America. So somehow you got to figure out how to take these predictions and then extract USD out of your brokerage account so you can pay those bills. And it is being done all the time. I'm doing it. Other people are doing it. You can do it too. With that, we are going to close off the Bubbles Stock Market Show for Monday, the trading week of Monday. October 20th, 2025. Aloha, my fine feathered friends.